The finance world is transforming, with real-time payments, RTP, at the forefront of this change. As technology progresses, the demand for immediacy and convenience in financial transactions has grown, pushing the development of RTP systems globally. This shift towards instant financial transactions meets consumer expectations and introduces a new dynamic in how money flows across the economy. Section 1. Real-time payments. Enhanced user experience. Real-time payments allow money to be transferred from one bank account to another in seconds, at any time of this day, any day of the year. The immediacy of RTP offers vast benefits for consumers and businesses, catalyzing its rapid growth and adoption across different regions. Consumers today, especially younger demographics accustomed to the speed of digital communication, expect similar immediacy in their financial transactions. Real-time payments satisfy this demand, providing a seamless, quick, and efficient way to manage money. Whether splitting a dinner bill, paying rent, or sending money to a family member in urgent need, RTP systems facilitate these transactions instantaneously, enhancing convenience and satisfaction. Business advantages. For businesses, the advantages of RTP are manifold. Access to funds immediately improves cash flow management, a crucial aspect of business operations. Companies no longer need to wait days for payments to clear, enabling them to manage their finances more effectively, pay bills, and reconcile accounts faster. This immediacy can be particularly transformative for small businesses and freelancers who often operate on tight margins and need quick access to cash to maintain their operations. Moreover, real-time payments support the growth of the digital economy by enabling new business models and services. E-commerce businesses, gig economy platforms, and online services can all benefit from RTP by giving them the financial agility to operate dynamically and respond to market demands instantly. For instance, ride-sharing apps can pay drivers immediately after their rides, improving job satisfaction and loyalty among contractors. Financial inclusion. Another critical aspect of the growth of real-time payments is the support it provides for financial inclusion. Access to traditional banking services is limited in many parts of the world. Mobile payment solutions utilizing RTP can offer a lifeline by enabling individuals and businesses to participate in the economy without access to standard banking products. In developing countries, this is particularly impactful where RTP systems via mobile technology allow unbanked individuals to receive payments, make purchases, and secure loans without needing a traditional bank account. Challenges and security. However, the widespread adoption of RTP comes with challenges. The need for extensive infrastructure upgrades to support real-time processing is a significant hurdle, especially in regions with less developed banking technology. There is also the increased risk of fraud with instant transactions, as they allow less time for checking and intervention. Financial institutions are therefore investing heavily in advanced fraud detection and prevention systems to safeguard the integrity of RTP systems. Additionally, regulatory frameworks are essential to the rollout of RTP systems. Regulators need to ensure that these systems are secure, reliable, and accessible while fostering an environment that encourages innovation and competition. In the European Union, for instance, the introduction of the PSD2 directive has paved the way for open banking and RTP by requiring banks to open their APIs to third-party providers securely. Section 2. Impact on international money transfers. Transforming cross-border transactions. The landscape of international money transfers is experiencing a significant transformation. This shift is reshaping how individuals and businesses manage cross-border transactions, making them faster, more affordable, and more accessible than ever. The impact of these changes is profound, as they not only enhance the efficiency of global financial operations, but also support economic activities in developed and developing regions. Traditionally, sending money internationally was costly and time-consuming, often laden with high fees and lengthy waiting times. Traditional banks, which have long dominated this space, typically involve complex processes and multiple intermediaries, each adding their charges and delays. Migrant workers and remittances. One of the most significant impacts of these advancements is on migrant workers who send remittances to their home countries. Remittances are one of the most important sources of income for millions of families worldwide and a critical portion of the economies of many emerging nations. The World Bank notes that remittances often exceed official development aid and are more stable than private capital flows to developing countries. Fintech innovations have increased transaction speeds and decreased costs, ensuring that more money reaches those who depend on it most and contributing directly to poverty reduction and economic growth in these regions. Blockchain technology. Blockchain enables the transfer of funds across a decentralized network, significantly reducing the need for intermediaries and thus lowering costs further. It also adds a layer of security and transparency that traditional methods lack, as each transaction is recorded in a way that cannot be altered or deleted. This technology's immutable and transparent nature is particularly appealing for businesses that require a clear audit trail for their international transactions. Businesses are also reaping the benefits of these developments. In a globalized economy, the ability to transfer money quickly and reliably can affect a company's operational efficiency and ability to compete. Faster transaction times mean improved cash flow management and quicker response times to market opportunities. Moreover, the lower costs associated with digital transfers allow small and medium-sized enterprises, SMEs, to expand their operations internationally without the prohibitive costs traditionally associated with international banking. Challenges and regulatory differences. Despite these advancements, challenges remain. Regulatory differences across countries can complicate digital transfers, and digital security and fraud issues continue to pose significant risks. Moreover, not all regions have equally benefited from these technologies yet, as disparities in technological infrastructure limit some countries' access to these new tools. Section 3. Innovations in peer-to-peer payment systems. Rise of P2P payments. The financial world has seen a remarkable shift in recent years with the rise of peer-to-peer P2P payment systems. These innovations have transformed the way individuals exchange money, making transactions quicker, easier, and more accessible than ever before. As technology advances, P2P payment systems are not just a convenience, but are becoming integral to daily financial interactions for millions worldwide. Social media integration. One of the most significant innovations in P2P payment systems has been their integration into social media platforms. Services like Snapchat and Facebook Messenger have incorporated payment features, allowing users to send money within the context of their social interactions. Blockchain and cryptocurrencies. Blockchain technology has introduced even more potential for innovation within P2P payment systems. Cryptocurrencies, most notably Bitcoin, operate on a peer-to-peer basis and offer the advantage of decentralization. This means they are not controlled by any single authority, a feature that reduces transaction fees and increases transparency and security. Using blockchain in P2P payments ensures that transactions are immutable and traceable, significantly lowering the risk of fraud. Mobile technology and financial inclusion. Mobile technology has also been a driving force in expanding P2P payment systems. Bank accounts are less widespread than mobile phones in many parts of the world, especially in developing regions. Mobile payment systems have bridged this gap by allowing users to store and manage funds on their mobile devices and transact directly from their phones. Small businesses and freelancers. In addition to broadening access, P2P payment systems have fostered innovation in the business sector. Many small businesses and freelancers now rely on these platforms to receive payments for services or goods, enhancing their ability to operate flexibly and efficiently. For companies, having the capacity to get money immediately without the need for traditional banking infrastructure has opened up new opportunities for growth and expansion. Challenges and security. However, the rapid growth of P2P payment systems is challenging. Regulatory concerns, particularly around security and privacy, remain at the forefront. Conclusion. Open banking is transforming the financial landscape worldwide, driven by real-time payments, international money transfers, and innovations in peer-to-peer payment systems. These advancements promise increased accessibility, transparency, and consumer empowerment. As technology advances and regulatory frameworks evolve, the future of payments looks poised to become more inclusive, efficient, and secure. This ongoing transformation supports global economic development and empowers individuals and businesses to manage their financial activities more effectively, setting a new standard for financial transactions in the digital age.